Today, we're going to be talking about the relative strength line indicator that I just launched on TradingView for free. I'm Andy O'Connell. I'm a swing and position trader, a three-time top performer in the U.S. Investing Championship, and I'm a current competitor in the $1 million plus Money Manager division for 2026. The goal of this indicator is to help users avoid underperforming stocks that, if you get into, can absolutely tank your performance, and highlight stocks that have the potential to be super performers. Without further ado, let's dive in. So first of all, what is the relative strength line? A relative strength line shows you how a stock is performing compared to a benchmark like the S&P 500. The concept of relative strength was first developed by Robert Levy. He wrote a book, The Relative Strength Concept of Common Stock Price Forecasting. And in this book, he said that stocks with strong past price performance tend to continue to outperform the market. And this phenomenon is known as price momentum. William O'Neill took this concept a step further, and he created the relative strength line for his company, IBD. And that really incepted what we know today and what everyone uses. These are timeless principles, and this indicator has been used for decades to find outperforming stocks. Relative strength is a simple yet elegant formula. It is simply a ratio of a stock price divided by its benchmark price times 100. If a stock is outperforming its benchmark, you will see the relative strength line increasing, and as a stock begins to underperform its benchmark, you will see the relative strength line decrease. A few of the key features of our indicator. We have the relative strength line itself, which is this blue. We have relative strength line moving averages. We have a relative strength line moving average cloud, which is this red or green. We have a relative strength line new high indicator. And then we also have a 52-week price high label. All of these features are configurable in our settings. Now, first of all, I'm going to toggle the relative strength line off. And why is it that I prefer to have my relative strength line off and really just prefer to use the relative strength line moving average clouds? It's because I don't actually care about the relative strength value itself. You'll see different platforms, they'll have relative strength scores, relative strength composite scores across multiple time frames. But in my opinion, those don't matter all that much, because let's say a stock, for example, outperforms the market dramatically. Let's say that a stock goes up 1,000% over 8 months. If you look at any relative strength score, any relative strength composite, however you want to slice and dice the time frames, relative strength is going to be off the charts, right? It's going to be a 99 RS rating. But let's say that stock then has a dramatic decline of 40%. The stock is still going to be up 560% year to date, which is still up a ton, right? So if you're looking at relative strength scores, relative strength composites, and you're really overcomplicating this, you're going to screen and it's going to show you, hey, this stock is a buy because it has the highest score out of all the other stocks in the market. But with that being said, if that stock just dropped 40% in a few days, the stock's going to be below all of its key moving averages. The chart is going to look broken, and it is not going to be a stock that you actually want to buy. So it's for that reason that I just completely toggle the relative strength line off. And my primary focus when using this indicator is just focusing on these relative strength line moving averages. I default this to a fast moving average, which is the 10-day EMA of relative strength. And my slow moving average is the 50-day simple moving average of relative strength. If the stock price begins to fall, that 10-day EMA of the relative strength line is going to be very responsive, and this moving average cloud is going to show me that. So if we look at these moving average clouds, every time the fast moving average crosses above the slow moving average, that's going to give us the green cloud, and you're going to see this green circle signal appear on the chart. Same thing if the fast moving average finishes below the slow moving average, that's where you get the bearish cross, you get the red cloud, and you get this red signal. It makes it very easy for me to just visually pull open a chart. If I see a green cloud, that means the trend of the relative strength is improving. If I see the red cloud, it's telling me the trend of the relative strength is getting worse. This circle right here is showing me the relative strength line new high signal. Our default setting for this relative strength line new high signal is 50 bars. So what this is telling us, if the signal is lit up, is that, hey, the relative strength line, if we look at the last 50 bars, it's at its highest point on that time frame. So in this example that we're looking at, this stock Glasshouse, it has just reached its relative strength line new high, and this stock is also trading at a 52-week price high. We include that in the indicator because it can be a potent combination if the relative strength line moving average cloud is green, if you get that relative strength line new high indicator, and if the stock is also trading at a 52-week price high, because that really just means there's very little in the way of overhead supply that can take down that stock. The main reason why I focus on relative strength moving average crosses is because of my unique trading style. For the most part, I like to trade inflection points in stocks and sectors. So I like trading a beaten down sector that is just starting to shift into a bullish trend, and I like trying to ride that trend the entire way higher. Maybe 20 to 25% of my trades are those typical can slim trades where, hey, you're taking a stock like, let's say SMDK, for example. Hey, this stock is already up 350%. On the year. It had a bullish moving average crossover months and months ago. I'm going to try to take this out of a tight little base and trade the thing for continuation. I take those trades, but they're not quite as often as what I'm describing with the inflection points. If you'd like to monitor for the signals in our indicator, all you have to do is right click on any chart, click this add alert button, and then we're going to shift. We're not going to do price. We're actually going to select our relative strength line indicator. And we have 3 signals to choose from. Very simple. We have the bullish MA crossover, the bearish MA crossover, and we have the relative strength line new high. So for example, because this is in such a bullish trend, if I'm looking for a trend reversal, and we select this bearish MA crossover, and I'm going to go ahead and create that alert. Good example of a recent relative strength line moving average cross was in Amazon recently. And I actually traded this stock using that relative strength moving average crossover signal. Here's our Pristine Capital Discord server. Anyone that's a member of our premium Substack is added into the server. And in these trades channels, I actually share what I am trading for the US Investing Championship. As you can see here, on March 26th at 10:34, I sent out a trade alert. And in this alert, I bought Amazon 210 strike call options at the October expiration for $26.80. And this can give you a feel as to how I actually use this in tandem with my entire trading system. Now, for my trading style, I'm blending macro, fundamentals, and technicals. So as you can see from my rationale for entering Amazon, the stock was breaking above its monthly value area. Value area as an MGI is another one of our TradingView indicators. It is part of our premium suite. I highly recommend you check that one out as well. And you can do that at this website right here. But as you can see, Amazon was breaking out from its monthly value area, and we were also getting very close to a relative strength line moving average crossover. So I actually front ran this signal by just a day or two and entered those call options at what I thought was an inflection point in the stock. I was also looking at the macro picture here, so you can see I wrote that the VIX is trading greater than a 25. If there's any sort of surrender deal for the Iran war over the weekend, the VIX could get crushed from that 25 level. Then as you can see, I was also taking into account the fundamentals. Amazon has a stake in both Anthropic and OpenAI, and they also stand to benefit from physical AI. In this trade, we're blending the macro picture, we are blending the fundamentals, then we're also looking at, from the technical standpoint, that monthly value area breakout and the relative strength line moving average crossover. And as you can see, we ended up getting a dip in Amazon stock maybe 2 days later, but then we got the bullish relative strength line moving average cross, and this asset really just went off to the races. Now here's the thing, there is no silver bullet indicator. Not every relative strength line moving average cross is going to lead to a super performance run in a stock. It doesn't work like that. But here's the thing, every single super performance run in a stock is always preceded by a relative strength line moving average cross. And so for that reason alone, it makes sense to add this indicator to your process. Another way that this indicator is very useful is for avoiding certain sectors and certain individual names. If we look at the IGV software ETF, this ETF had a bearish relative strength line moving average cross on October 29th of 2025. And it still has not had a bullish relative strength line moving average cross. So if you were using this indicator and you said, hey, I think software stocks are getting really beaten down, I like this sector, I think I can play it for mean reversion, but I'm going to wait until that relative strength line moving average cross, you would have avoided a lot of this downside pain. Now, when you're using this indicator, it's not going to get you in at the bottom because it's waiting for relative strength, right? So you're not going to get in at the bottom, but you're going to get in at an entry point where you actually have some confirmation, which is a good thing. It's much better than just buying the falling knife. But to summarize what we just covered, the relative strength line is a simple yet elegant formula. It is the ratio of a stock's price divided by its benchmark price plotted over time. There's moving averages on that relative strength line, and we can use moving average crosses to find inflection points in stocks. Our indicator is the best available to do that with. It's completely free on TradingView. And if you would like to check out our full suite of TradingView tools, you can navigate to tools.pristinecapital.net. If you would like to check out my premium market research and trade alerts where I share what I'm trading in the US Investing Championship, scan the QR code on your screen. Hope this video was helpful. Take care.